You're ignoring the biggest investor in your life, and I can prove it. Every 2 weeks, someone drops thousands of dollars into your account and asks for nothing back except your time. But you're treating them like a free ATM instead of a partner who's trying to make you rich. I'm Will, and I've spent the last decade watching people accidentally build wealth while thinking they were just going to work. Your employer isn't just paying you a salary, they're acting like a venture capital firm, and you're the business they're investing in. They're offering you deals that would make any startup founder cry with happiness. But unlike those founders who actually read what they're signing, you're just scribbling your name during orientation while thinking about lunch. Let's start with the most obvious free money you're probably ignoring, the 401k match. Your company says they'll match every dollar you put in up to 6% of your salary. That's an instant 100% return the second the money lands in your account. Show me a Wall Street investor who can promise that. You can't, because that person doesn't exist, and they'd go to jail if they tried. But here's what drives me crazy. About one third of employees who get a 401k match don't put in enough to get the full amount. They're literally saying no to doubling their money because they think they can't afford it right now. That's like refusing to accept $2 for every $1 you give someone because you're too busy trying to make money. It makes no sense. A surprising number of companies will pay thousands of dollars every year for you to learn new skills, get certificates, or even finish degrees. This isn't charity. They're investing in you because a skilled employee makes them more money. But here's the thing, those skills are yours forever. You can take that company paid education and use it anywhere. Think about it like this. Startup founders work incredibly hard to get free money because it's cash they don't have to pay back. Your employer is offering you that free money and you're not even applying for it. If your company offers $5,000 in education benefits every year and you don't use it, you've thrown away $5,000. Do that for 5 years and you've missed out on $25,000 in free learning. That's not pocket change. That's a down payment on a house you didn't save. Now let's zoom out because the actual benefits are just the beginning. The real eye opener is understanding what your salary actually means in the bigger picture. Your paycheck isn't the finish line. Your paycheck is starting money for you incorporated. Every successful business needs money to start making returns. Real estate investors need down payments. Stock investors need money to invest. Entrepreneurs need cash to survive while building. Where does that money come from? For most people, it comes from their salary. Your regular job isn't the investment, it's the investor. When you see it this way, everything changes. You stop seeing your job as this soul crushing thing you have to do and start seeing it as a strategic partnership. They're funding your actual wealth building activities. The salary they pay you on Friday is the same money that buys your rental property or your stocks on Monday. They're your money partner. Here's the problem though. Most people treat their employer like an ATM instead of an investment firm. They show up, grab their paycheck, and completely ignore everything else. They leave money on the table. Let me show you what I mean with actual numbers because this is where it gets ridiculous. The average employer's contribution to benefits is worth about 30% of your salary. If you make $70,000, there's another $21,000 sitting in various benefit buckets. Most of that is health insurance, which you probably use, but buried in there is retirement matching, HSA money, life insurance, disability coverage, and professional development funds. The question is, are you taking all of it? Let's run through an example. You make $80,000. Your company offers a 6% 401k match. That's $4,800 of free money every year. They also put $1,000 in your HSA. They've got $3,500 in yearly education benefits that nobody uses, and they'll give you back $500 a year for wellness stuff like gym memberships or standing desks. Add it all up, like you're looking at $9,800 in available money that most people partially grab or completely ignore. Over a 30-year career, even without any investment growth, that's nearly $300,000. With normal 7% growth, you're looking at close to $1 million in money you left behind. $1 million because you didn't read the benefits website. Now, here's where it gets even more interesting. We've been talking about the obvious benefits, the stuff listed in your pay package, but there's a hidden treasure most people never even consider. I call it strategic resource extraction, and it's completely legal. Your employer has infrastructure, software licenses, professional networks, training programs, insider knowledge. Every single one of these can be used to build your personal wealth, and they're basically begging you to use them. Take software access. If you work for any decent company, you probably have access to tools that would cost you thousands per year if you bought them yourself. Project management software, design tools, data platforms. Learn them, master them. That's not just making you better at your current job, that's building skills that increase your value everywhere. Same thing with professional networks. Your company probably sends people to conferences, industry events, training sessions. Go to all of them, not to be a good employee, but because you're building connections. Every person you meet is a potential future client, partner, or employer. You're networking on company time with company money. That's a free business development program. And let's talk about time leverage because this is beautiful. Most salaried jobs have built-in wasted time, meetings that should be emails, pointless processes, dead time between projects. The amateur watches Netflix during those gaps. The professional uses that time to build. You can research investments, take online courses, plan your side business, or develop new skills. You're being paid to invest in yourself and nobody's tracking it because you're getting your actual work done. I'm not saying steal time, I'm saying optimize it. If you can finish your job in 35 hours, but you're paid for 40, those 5 hours are an opportunity. Use them strategically. But the deepest part of this whole system is understanding what salary actually buys beyond just money. Your job gives you three things that are way more valuable than people realize: credibility, stability, and options. Credibility first, when you're employed, especially at a known company, you have proof you're legit. Banks give you mortgages, landlords approve your applications, credit cards give you higher limits. You can make large purchases and investments that would be impossible without a job, even if you had the same amount of cash. Employment is a signal that opens doors. Use it while you have it. Stability creates runway. When you've got a predictable paycheck, you can take smart risks with your invested money. You can buy rental properties with a loan because you can prove income for the mortgage. You can invest aggressively in the stock market because you're not depending on those investments for immediate survival. You can start a business on the side because your bills are covered. The salary isn't the wealth. The salary is the safety net that lets you build wealth without fear. And options might be the most underrated benefit of all. Every year you stay employed and keep investing, you're buying yourself choices: the choice to take time off, the choice to switch careers, the choice to go part time, the choice to walk away from a bad situation because your investments can cover your expenses. Most people think freedom comes from escaping the 9 to 5. That's backwards. Freedom comes from using the 9 to 5 to build enough assets that the 9 to 5 becomes optional. That's the entire game. But here's the trap most people fall into at this stage: they let that extra income blend into their main account. Suddenly they're eating out more, upgrading stuff, buying things they don't need because they feel richer. You need to treat that raise like it's completely separate. The second it hits, move it. Don't let it touch your checking account. Don't let it mix with your grocery money. The moment you allow that, it disappears. You're not depriving yourself. You're protecting future you from present you's terrible spending habits. Automation is the difference between people who build wealth and people who just talk about it. Year 5, you've been watching the housing market in your area. A small condo goes on sale during a downturn. It's underpriced because it needs cosmetic fixes. You've got $35,000 saved. You put down 20%, finance the rest at a low rate because your job makes you creditworthy, and you rent it out. The rent covers the mortgage plus $100. You just bought an asset using the credibility your job provided, and it's paying for itself. Your job didn't buy that property. Your job made buying that property possible. Year 7, the condo went up in value. You've been making extra payments with your raises while keeping your lifestyle flat. You've got $80,000 in equity. Now you take out a home equity line against it and buy a second property. Now you've got 2 rentals. Your regular income is still your stability, but your net worth is starting to compound on its own. The salary is the fuel. The assets are the engine. Now maybe you want to speed this up. This is where you have to stop being a loyal employee and start acting like a business closing deals. Like every time you switch employers, you're essentially ending one investment and starting another with better terms. You're negotiating a new value for you, Inc. The people who stay at one company for 20 years out of loyalty are leaving millions on the table, not because their employer is evil, but because they're not forcing a renegotiation. When you switch, you reset everything. You get a signing bonus, that's a cash injection. You get a salary bump, that's more runway. By year 10, you haven't just saved money, you've actively traded up to investors who offer better terms. Year 10, your 401k has been growing at 7% every year with steady contributions in the match. It's sitting at over $200,000. Your HSA, which you've been maxing and never touching, is at $45,000. You've got 3 rental properties generating $1,800 a month in positive cash flow after expenses. Your regular investment account has $120,000 in index funds. Your total net worth just crossed $600,000. You're still working the same type of job, or maybe you switched companies for a raise and better benefits. But here's the thing: you're not dependent on the job anymore. You're leveraging it. This is when the psychology flips. Most people at this stage feel trapped by their lifestyle. You feel free because of your assets. If your boss is unreasonable, you can leave. If a better opportunity appears in a different city, you can take it because your rental properties are managed and your investments travel with you. You're not chained to the paycheck. You're optimizing the paycheck. Now let's address the pushback I know you're thinking. Okay, Nick, this sounds great, but I don't make $80,000. I'm at $45,000 and barely surviving. Fair. Let's run those numbers. $45,000 salary. after taxes, maybe $34,000 take home. If your company offers a 401k match, even a 3% match, that's $1,350 of free money every year. If they offer an HSA eligible health plan, you can contribute the minimum to get the tax break. Let's say you save $2,000 a year in taxes through smart benefit use. That's $3,350 you didn't have before you understood the system. It's not instant retirement, but it's the foundation. The game scales to your income level. The rules don't change. You're still extracting maximum value from benefits. You're still keeping lifestyle inflation under control. You're still building cash reserves like the timeline stretches, sure, but the math works at every income level because the math is about percentages and discipline, not absolute numbers. And here's what nobody tells you about this path. It gets easier, exponentially easier. The first $50,000 is a grind. The second $50,000 comes faster because your assets are working. The third $50,000 feels almost automatic because compound growth is doing heavy lifting. By the time you hit half a million in net worth, your investments are generating more growth every year than you're putting in. You've hit escape velocity. The job is still useful for benefits and credibility, but it's no longer the main driver of your wealth. That's the end game. Not quitting your job in some dramatic scene, not retiring at 35 to live in a van. The end game is reaching a point where your job serves you instead of you serving it, where work is a choice, not a survival requirement, where you show up because the benefits are valuable and the work is interesting, not because you'll be homeless without the paycheck. Your employer thinks they own your time. Let them think that. Meanwhile, you're running a side operation where their salary funds, your investments, their benefits build your safety net, and their credibility opens doors they'll never walk through. You're not their employee. You're an investor extracting maximum return from a corporate partnership. The real scam isn't that jobs underpay you. The real scam is that most people never realize their job is the best investor they'll ever have, offering free money, tax advantages, and institutional backing. And they walk away from it chasing freedom they haven't funded yet. Don't be most people. Take everything. Build quietly. Leave when the math says you can, not when your feelings do.